Good afternoon, everyone. My name is Michael LeBlanc, Senior Portfolio Manager for Canaccord Genuity Wealth Management, and thanks for joining us again here this week where we do our live weekly update on everything we see that's going on in the markets and what we see coming up as well. So thanks for joining us. As always, keep in mind everything that we cover on here is for information purposes only. Do your own due diligence or reach out to us at mikeonmoney.com. Always happy to answer any of your personal questions or specific questions to your scenarios. And you can also see all our other content at our portal there at mikeonmoney.com. Love to hear your feedback and touch base with you. With that, let's jump into what's going on out there. We're looking for some April retail numbers this week. We'll dive a little bit into the expectations there in a moment. We're also going to look at production and capacity utilization for April and some more earnings coming out for Home Depot and Walmart. Also, the Federal Reserve Bank in St. Louis is going to speak at the Energy Infrastructure Council, and the Federal Reserve from Chicago is going to be speaking at the Money Marketers event, kind of just give us a forecast of what they're seeing coming up for the balance of this year. As far as what's going on in the markets this morning, we did see the stock futures rose early this morning, and the markets obviously followed suit. A little bit of a green day after a pretty rough week last week, depending on what side of the market you're on. Investors are still kind of working to grapple with, inflation and economic concerns around the rise in interest rates. I'll dive a little bit more, kind of where we see things are right now and where we see things kind of headed as we get into the summer months here. Stocks have swung dramatically, lately as investors have tried to, take advantage of these lows. There's a lot going on, everything from economic situations, the geopolitical, obviously COVID-19 still out there with different areas of China going into full lockdown. And really taking a look at what the U.S. Fed Reserve is doing with interest rates for this year. We're also seeing surging natural gas prices squeeze the U.S. industrial sector. So, as we have inflation out there, one of the big challenges for this year in particular for the inflationary front is the Ukraine-Russia situation, because we were going into an inflationary market. But with all the natural resources being tied up with the Russian sanctions and Ukraine kind of being offline, those resource prices are driving up costs in a lot of different areas. And one of them is the natural gas, which is affecting transportation costs and industrial production throughout the United States, as the United States exports more and more gas to Europe to cover the shortfalls from the Russian sanctions. Biden's team is also sees few options on inflation before the midterms, really, trying to get short-term inflation under control before the midterm election, which is going to be a big issue for the election as to whether the Republicans can take back the Senate and maybe the more control in the House as well. As people rally against a lot of controversy around the U.S. Gasoline prices, but also as all other prices continue to rise throughout this market. New York State factory activity slumps again in May. So we looked at this back in April. We did see the factory slow down a little bit as new orders started to slow and businesses, retail and warehouse inventory started to increase. So this is a supply chain catching up, obviously not in all areas, but things starting to catch up. So that's a kind of a leading indicator that we might be going into a glut situation or an excess situation as far as the supply demand curve goes, as the supply chain starts to repair itself a little by little. BlackRock is kind of calling summer rally for bonds, but bull market likely over as the sell-off in U.S. stocks and bonds continued last week, but likely see a little bit of that dried up over the summer. And we'll talk a little bit more about the call it the bull market we're seeing in stocks as they bounce off the bottoms here. White House weighs in on inflation versus farmers. So this is a big juggling act with the White House. They're expected to announce in the coming weeks, the amount of biofuel like corn-based ethanol that U.S. refiners must blend into the fuel this year. This decision, will force it to weigh in on, the taming inflation or supporting the nation's farmers. So it's a balancing act, amongst many industries whenever you're making broad federal decisions like that. On the aircraft front or the airline front, we're seeing a lot of activity. Obviously, the aircraft leaser SMBC is looking to buy GoHawk for about roughly a $7 billion deal. So these are leasing companies, so they business to lease the aircrafts out to the airlines. Obviously, those companies, were really shaken up in 2020 when we had all the closures and pretty much all travel at a standstill. But as airlines start beefing up their fleets again, it's a pretty accretive acquisition that they're looking at. There's been a lot of activity in the airline industry. In fact, we added to our portfolios a really great position, Exchange Income Fund, which is a portfolio of diverse companies, but one of their main components is air charter fleet, and it's done exceptionally well in the portfolio since adding it around $39. It's up over 45 today, and they increased their dividends since we added it. So, and it was already paying almost a 6% dividend. So great acquisition in the portfolios and a great area of the market that continues to be to expand as more and more people stay on the shipping, their packages across the country. The online shopping continues to stay strong even as things open up. So let's take a look what we're seeing coming up this week. Walmart, as I mentioned, is expected to report a fall in the first quarter profits, mostly hurt by those higher shipping costs and other supply chain costs. That inflation that we saw spike in the first quarter is going to affect earnings for that quarter pretty much across the board. So we'll probably see that everywhere in retail. Although we are expecting retail sales to rise for the month of April. While people were buying more, the profits or the cost of delivering those services went higher, so the profits are lower. We're also seeing the industrial production is likely to increase in April as well. As I mentioned, business inventories are rising, so more and more of the supply chain, as it gets more and more back on track, we're going to see the inventories rising again, which will hopefully put downward pressure on pricing. Also, the home builders and housing market index expected to edge down again for May as we continue to see those interest rate hikes impact the housing market, both here and in the United States. Oops, sorry about that. Coming up also in the US, we've got the golden arches are going to go dark in Russia. So if you haven't been following this story, McDonald's is planning to exit Russia completely after being there for 30 years. They're working to negotiate selling off the restaurants throughout the country and pretty much over the invasion of Ukraine. So they're looking to completely exit that country as far as business goes. So a big move by McDonald's, and we'll see kind of how they end up what they end up being able to negotiate for those properties. JetBlue, if you haven't been following this story, JetBlue put in a bid to buy Spirit Airlines, kind of merge the two discount airlines down in the United States. Spirit Airlines rejected the offer. So JetBlue has initiated a hostile takeover of the New York-based airline Spirit Airlines to try to bring those two together, just to have a larger rival. Spirit had a lot of concerns around whether it get approved on the antitrust rules, but we'll see more as that story develops. Twitter CEO is defending the company's counts of their spam accounts after Musk criticized their numbers. So this is the ongoing saga of Elon Musk buying Twitter. So just to recap quickly, I won't get into all the drama that led up to it, but Elon Musk put a $44 billion takeover or take private offer for Twitter. It was accepted by the board, which roughly translates to just over $54 US a share for Twitter. The market, as we talked about last week, the market really didn't think this deal was going to go through, at least not go through as advertised, as the stock price fell well below the $54 price. In fact, it's at $37 now, but it originally kind of worked its way down slowly to, it started around 48 and continued to work its way down, pretty much signaling that there was a lot of doubt that this transaction was going to go through. Now there's a lot of talk of Elon Musk renegotiating the price of the deal. He does have a $1 billion breakup fee if he doesn't go through with the deal. So, but the current valuation of just below $37 a share, he would save more than $1 billion to renegotiate that, and likely that breakup fee might be waived or reduced should they be able to renegotiate a lower price. But basically, he's gone back and in their disclosures, Twitter accounted for 5% of total Twitter accounts were fake accounts or spam accounts. These are accounts that people use to beef up their followers and use it kind of to have bigger impacts on their tweets, or at least make it seem like they have bigger impacts. And he's questioning that number. So if he can find something inside the disclosure that isn't accurate, he can use that to either renegotiate or not do the deal at all. So we're seeing a lot of pressure on the Twitter stock price as doubt continues to build that that's going to go through. Tesla is delaying its plans to restore its Shanghai plant back to pre-lockdown levels, and Shanghai has been pretty much in lockdown for almost a month now. So trying to get full staff back again is difficult. So they're looking at least another week delay before they get production back up again, and this is really affecting deliveries. I don't know, I haven't seen the wait times for Teslas these days, but most vehicles have very long wait times. Some of the manufacturers are starting to catch up as the chip side of things, the microchip side of things on the supply chain is starting to clear up, and they're able to get those into the vehicles and get them delivered. But obviously Tesla having a lot of the production out of Shanghai right now, they need that plant back up and running. US is eyeing baby formula imports amid nationwide shortage. So another story you've probably heard in the news in the US, they're having massive shortage of baby formula. Parents are unable to find it. They've turned to homemade solutions, which is not recommended. Given the content of that formula is pretty regulated to make sure it's safe for babies. And obviously there's contamination issues and a lot of different things to potentially deal with. That being said, they are looking at bringing imports. I know Canada has supply. We're not facing a shortage here, and they are also working with the manufacturers to get some plants back online that were having difficulty, or were some lines that were closed down and which caused the shortage in the first place. So, obviously difficult for people in the US who have young children and require formula for whatever situation. In Canada, the top news out there, Trudeau's facing attacks on the Bank of Canada kind of strategy towards inflation. So as the Conservatives, battle out for the new leader, the leadership battle for the Canadian Conservatives, the front runners are attacking the Bank of Canada's track record as far as how it's dealt with the inflation climate that we're in right now. We've seen the same thing in the US, the opposition attacking inflation, as I mentioned earlier. The Biden party being quite concerned about the November election, as inflation is kind of one of the primary talking points there. So same thing here in Canada. And also Canada's open public consultation on national climate adoption strategy. So Canada's launched a public consultation phase on national climate adaptation or adoption, aiming to develop a framework to help cope with increasing natural disasters and impact of global warming. On the dollar front, US dollar is down slightly, against the euros, mainly on that strengthened market, on the market. It wasn't a very big move. Obviously, the US dollar staying strong after the Fed rise and the strong retail numbers. But that being said, it's really the flight. Still, the story is the flight to safety. So as we see negativity in the markets, and certainly negative outlooks of the markets, we're going to see that stronger US dollar. And as far as the markets go, as we talked about last week, we did start dipping our toe into some different positions. We recommended everyone to be cautious. It was, I do think last week, if you did dip your toe in, you've seen the rallies up, there's a rally or coming off the bottoms that we've seen so far, which is beautiful to see. That timing was great, but I wouldn't bank on that. And I also wouldn't think that you've missed the boat. We didn't go full in last week. We moved into a few positions, strong dividend paying positions. I mentioned the Exchange Income Fund, paying almost 6% dividends. We moved into utilities that are paying strong dividends. Really getting paid to wait, because we don't think that the pain in the market's over. There's still a lot to happen. Inflation has not gone away. There's still a lot of things to overcome before we see that ease. So don't see this pullback of the market as a negative thing. I know a lot of people, if you are very heavy equities, especially on the tech side, your portfolio is probably hurting a little bit, but this type of volatility are great opportunities to get some solid growth in really quality names going forward, because it's basically a fire sale in the pricing. We get some really great dividend yields out there in some good companies. And even on the in the tech front, there will be opportunities to open up. I think it's still early for that sector, but there's still, opportunities to open up. Again, go to michaelmoney.com if you have any questions. We're happy to talk you through a strategy for your portfolio if you happen to been exposed to some harder hit areas. On the commodity front, copper rose a little bit, and we're still seeing strength in oil prices as it was over 110 US this morning. So, our theme on the oil continues. We don't see any concerns or changes in that forecast, at least for the next quarter, but we'll keep you up to date on that for sure. So with that, if you have any questions, go to mikeonmoney.com, send them through to us. We'd love to hear from you. But thank you very much for joining us this week. Look forward to talking to you again next week. And take care, everybody. Thank you. Bye-bye.